Hey everybody, Economic Ninja here. I hope you're doing great. We're going to talk about the insurance industry and how the insurance industry is under very serious pressure and it is causing people that are trying to obtain insurance around the country to be in intense pressure. Do you remember when that last hurricane flowed through Florida and so many insurance companies had already bailed, literally already bailed out of the state about a year prior, and they were already having trouble finding insurance companies with the lack of competition. Premiums were just soaring for real estate. And then all of a sudden that hurricane hits and people are just left with, oh my gosh, what do we do now? We've lost everything. Check this out. This story is out of GIS and it's entitled Insurance Under Pressure. Really simple title, right to the point. It says the abrupt end of the cheap credit era has created winners and losers in the once quiet insurance industry. Expect major shakeups and possibly regulatory activity. All right, so it says right here, the last several years have put insurance companies under pressure. The industry's business models vary across the three distinct branches in which the companies operate: life insurance, non-life insurance, and reinsurance. Life insurance offers financial products that enhance the beneficiary's income welfare in the future thanks to the issuer's assistance. Contracts can also be arranged to include benefits to the insured, like a retirement scheme. In brief, insurers collect resources for a number of years during which they accumulate liabilities that will be liquidated in the future. By contrast, non-life insurers or non-life insurance covers the insured against the losses related to risky events like poor health, job loss, or accidents. In this case, the resources collected in a given year are used to cover the losses incurred by the insured in the same year. Finally, reinsurance characterizes companies that accept responsibility for at least some insurer's liabilities. In other words, the insured pays the insurance company a policy and the insurance company transfers the corresponding liability to a reinsurer. I like to think of it as a third party. Now, probability, disruptions, and luck. Check this out. Life insurance is profitable if the insurer's asset managers can beat the promises made to the insured. Poor management and over-generous commitments to the insured means losses. This always happens in boom times, just so you know. Everything's great, assets are going up, things are great. We're gonna, give you the world. We're gonna promise you the world, but then everything changes. Here we go. It says non-life insurance covers a much shorter time horizon. Its profitability depends on the ability to access and the probability disruption of a large set of events, on luck, on cost cutting, and on effective monitoring. Profit and losses for the the reinsurers are also about probability, disruptions, and luck. Reinsurers prosper because the insurers may decide to expand their activities without running additional risks or choose to change their risk profiles. All right? Now, check this out. This is where it gets interesting. Uncharted territory for life insurance. You can say that. If the last 3 years have taught us anything, we're in uncharted territory. But now let's talk about life insurers. Central bankers' interest rate manipulation has deeply affected the life insurance segment. Guys, if you're in the insurance industry and you know things that are rattling or falling apart, please let me know. Keep people's information confidential. I do have to vet the person, but email me at ninjabrohawk@gmail.com and let me know what you're seeing on the front lines of the insurance industry, okay? I'd love to hear from you because I really want to get down into the nitty-gritty of the insurance industry because I think there's a lot of skeletons in the closet and a lot of things that need to be warned about so that people are on the up and up when it comes to all types of insurance, auto, life insurance, all kinds of things. Long-term health care. There's a lot of people with those policies are going, how valuable are they? How legit are they? What happens if the insurance company goes under from what's about to happen in the economy, okay? So let's dive back into the story. It says, under normal circumstances, insurers could offer a range of well-established and rather attractive contracts to the insured. The insured knew that their annual payments would turn into capital, right, which is liabilities for the insurers, the value of which would grow at a steady rate, which is low, in exchange for protection against the ups and downs of the financial markets. In some cases, insurers also offer protection against price inflation. Now think about this. How many insurance companies right now are just like, oh my gosh, what were we thinking? They never saw this coming. So many people, I'd say 99% of the population did not see this inflation wave coming, especially prior to 2019. All right, so it's going to take a lot of companies by storm. It says here, indeed, the past decade has been highly profitable for the insurance companies. Stop there. Why? Because of ultra low rates. All right, that's why. Which took chances and heavily invested in the stock markets, bond, or real estate markets. Ultra low interest rates led to booming prices in these areas because of risk-loving insurers saw their assets snowball while their liabilities rose at a snail pace rate. By contrast, those who thought the boom in asset prices would be short-lived and preferred to stay liquid lost money. Over the several years, their assets earned little or no interest while their liabilities kept rising. Sorry, hold on. So this is why I've been very leery on certain whole life policies and stuff, because the cost of everything is exploding and insurance companies are getting hammered right now. And their profitability is going down. And like we saw, what was one of the big companies that went down in 2008? AIG, right? An insurance company that was insuring at that time. The main reason why they're going down is they're insuring a lot of these mortgage-backed securities. But my point being is that I think that this inflation wave is going to eventually overtake so many insurance companies in the future. And the government's either going to have to backstop it or let certain insurance companies fail. That's going to be, I believe, the story of 2023, 2024. Massive, massive wave of insurance defaults. And that's why I want to know from people inside the industry, what is going on? What should I be warning people about? Because it's so very vital that we get the truth out to people, right? So that they can make informed decisions. Now, it says in here, in 2022, the financial boom went into reverse gear. Normal interest rates started rising, and the part of the winner's fat profits were eroded, yet their financial solidity had remained unaffected. Their risk taking had paid off, while the insured probably regretted having their assets frozen in low yield insurance contracts. However, for some insurers, 2022 brought dramatic losses. Now it says, think of these companies that stayed put for a decade, had trusted central bankers' statements about their ongoing era of ultra-low interest rates, speculated against higher rates, and bought derivatives that promised the margins required to match their rising liabilities vis-a-vis the insured in a low interest rate world. It turned out to be a bloodbath, especially for some United Kingdom companies, eventually rescued by the country's central bank. Now, guys, remember, I've told you this and I'll tell before, and I'll tell it again. I believe the collapse is happening in Europe first and then America. Even though we're crashing right now, it's not looking good. The big crash is going to come in the Eurozone, and then we have weeks, literally merely probably 4 to 8 weeks before you see that ripple effect hit our nation and take us down as well. So they are the barometer for what is going on. So right here, under mergers and acquisitions, the urge to improve performance in the fast-changing environment will increase competition, and some companies will face strong headwinds. Some, unable to adjust quickly enough, will first freeze their losses through reinsurance and then leave the market by trying to sell their life division to more effective actors. And I'm going to be honest with you, I think that the life division right now, with everything that's happened with COVID and the baby boomers right now, the life insurance division of an insurance company is starting to look like the commercial mortgage-backed securities industry of real estate. Okay, they're like, I don't want that. It's being affected so big. There's so many policies right now that we're having to pay on. And it's not good. It's not looking good. So I really want to know inside information of what's going on. So I think you're going to start seeing a lot more mergers and acquisitions and paper being sold really cheap. Guys, I hope you got something out of this. The insurance industry, I believe, is in for some big trouble in the next year and a half. And we're going to document it here on the Economic Ninja channel. With that being said, the Economic Ninja is out.